Hi, everybody. Thanks for joining me this afternoon. And for some of you folks, I know it's evening. So just want to let you know we're going to get started here in just a couple minutes. Just want to give others the opportunity to get logged on. So I appreciate you being patient, and we will get started here real shortly. All right. Thank you guys again for your patience. I think that's plenty of time. I want to be mindful of your guys' time with your family and friends. So don't want to keep you longer than need be, but feel like this is a really important topic. I get a lot of calls every week on this. I actually had a pretty extensive call today with a client that just kind of reiterated that the information I'm going to go over tonight is really important for you guys as investors to understand and really just empower you to ask the right questions when you're out there looking for these alternative investments. There's lots of operators out there. I don't want this webinar to be a sales pitch to you. I want it to be educational and for you guys to find value. So my name's Heather Dreves. I'm with Central Lending, and we're going to talk a lot today about due diligence on fund operators and managers. There's a lot of them out there. There's some really good ones. There's also some that probably aren't as good as others. And I think hopefully after the webinar, you guys will be empowered with the right questions to ask for that. A lot of you know that by attending the webinar and registering for it, you will be provided a checklist of items that you can use as just kind of a resource when you are interviewing operators and fund managers like Central Lending. So pretty excited about this. I see a lot of familiar names on the list. So hello to you folks that I already have relationships with or have spoke with you, and then also see a lot of new people. So we're always looking to grow this list and of attendees for this webinar. So we're going to do this on a monthly basis moving forward. And if you find value in this, feel free to invite friends and family. You know, the more the merrier. We just want to empower and educate investors on how to do their due diligence on investments to make the right decisions for their investment dollars. So we're going to get started here. I'm not going to just read off of slides. I don't have a whole ton of slides in this PowerPoint, but these are just kind of speaking points for me. But I want to encourage all of you folks to also be interactive on this webinar. And as always, you know, I encourage you, if you want to have an offline conversation in more depth, we can always do that as well. And I'll put some contact information up at the end of the webinar. But as we go along, if there are, you know, topics that we're speaking about that you have questions about, comments, I encourage you to put those through. You guys all should have a section where you can put your actual questions through. And so I'll do my best to address all those as we go along or at the end. But again, I want this to be interactive for all of you guys. So we're going to get started here. A little bit about myself. I've been in the fund management, private money industry, capital raising industry now for over 20 years, which is really hard to believe. I reside in the Pacific Northwest, so northern Idaho, specifically in a town called Hayden, Idaho. So we like to tell people it's a really terrible place to be, but it really isn't. We just we just don't like everybody moving here. But if you've been here, you know, and if you haven't, you know, and you're ever passing through, I encourage you to look me up, and I'd be happy to get together with you. I'm an active real estate with my a real estate investor with my family. We currently own rentals, as well as invest in funds and promissory notes. So we kind of do a little bit of everything. So we're active investors as well as passive investors. And this is a picture of my family. This is actually up in Whitefish, Montana. If you've never been to Whitefish, Montana, it's a beautiful part of the country. I encourage you all to take a trip there. So a little bit about myself. I also put my contact info up on this slide. You know, this is my personal cell phone number, but I'm here to, you know, assist you in any way I can, and am perfectly okay if you reach out to me on that number. And I also have provided you guys with my email address as well. So just a quick plug about Central Lending. Central Lending has actually been in business since 2017. We are a private lender, and we are based out of Central Florida, which is specifically in Lakeland, Florida, not all that far from Tampa, which is also very beautiful. I think I want to start to reside there in the winter because I'm not a huge fan of snow anymore. But Central Lending has been around for a while. Central Lending is a private lender, so we specialize in lending money to other active real estate investors. So mostly these people are out there identifying opportunities to purchase. Many times they are rehabbing these properties, increasing the value of them, and then creating a profit for themselves by reselling the property. And then also sometimes they're holding them. You know, it depends on the market. It depends on, you know, the specific place that the market is in, not necessarily geographically, but the real estate market. But ultimately, we lend on a short-term basis. So we're what's called a bridge lender. I hear people call it a hard money lender. I don't like to call it that, but it's all the same thing. So we do lend to active real estate investors, and we do this through deploying our own capital. So we raise capital into our funds specifically. We manage these funds, so that means that we manage the day-to-day activities of the fund, and it is our fiduciary duty to make sure that the fund is participating in activities that are going to be profitable for not only the fund, but for the investors that invest in our fund. So that is a very passive way that you can get involved with Central Lending as a passive investor. We also sell our promissory notes as well. I see actually a couple names on here that I recognize that are active note buyers. And so if you are one of those people that is a little more hands-on than somebody that's looking to invest in a fund, just know that there is opportunity to also buy performing notes as well. Central Lending also is an active real estate investor in the Florida market. So we buy real estate, specifically mostly residential real estate in the Florida market. Sometimes it's ground up, sometimes we buy them to fix and flip. But ultimately, you know, we are practicing what we preach. We are out there being an active real estate investor as well as a passive investor. And in addition to that, being a private lender. Like I said, our brick and mortar location is in Lakeland, Florida, although I don't reside there. That may change someday as winters begin to stay snowy here. But we actually have a office corporate location in Lakeland, Florida. So just a little bit about the company. But let's talk specifically about more on the topic today that we're going to cover. So due diligence. And, you know, it's interesting to me, everybody's opinion of what due diligence is different. So I thought it would be worth the time to just, you know, kind of touch on what that really means. And it's really just the process of scrutinizing an investment before venturing into it. So we're going to focus on the steps you as an investor should be taking before you make the investment. And I know that that probably sounds ridiculous to say, but I can't tell you how many calls over my career that I have taken from investors that have made investment decisions without doing a full due diligence on the investment that they're going into, to find out after the fact that things weren't what they seemed. They didn't ask the right questions, and now their investment dollars were at risk of being potentially lost because they didn't take the time and effort to actually do their due diligence. So, again, this due diligence process is something you guys should be doing before you invest. And there's also a lot of things that you should be doing after you invest to make sure that the checks and balances are there. But we're going to go through this today, and we're going to talk most specifically about things that you guys should be asking, checklists. You guys are all going to get a checklist for attending the webinar. We'll be sending that out through email later. But again, it doesn't mean that these are the only questions you should ask and that you should ask all of them. They may not be applicable to your situation, but it just gives you some kind of guardrails to set up, and then you can create your own processes from there. One of the other things that I think is important before you even start doing due diligence on an investment or on a fund operator or manager, I think you really need to sit down with yourself and also a spouse, if you have a spouse involved, or a partner in this. And I think you need to really sit down and ask yourself and your partner these questions, because sometimes you find that people are going through all this effort to do due diligence on a fund manager when the investment that they're looking at isn't even going to fit the things that they need or they want. So I think you need to sit down. You need to determine how much you're looking to invest. A lot of these funds require a minimum investment, and you want to make sure that the dollars that you have to deploy even come to those standards. There's no sense in doing a bunch of due diligence on a fund operator and their minimum investment is $100,000 and you have $25,000 to invest. So determine how much you're looking to invest. The other important thing is what kind of dollars are these? I talked to a gentleman today and he said, do you think this is a better option for me or this is a better option for me? Well, I think there's a lot of things that you have to ask yourself before determining that. And one of those is what kind of dollars are these? And what I mean by that is, are these liquid funds? Are these dollars money in your savings account? Or are you looking at deploying, potentially IRA funds? That is something that is very common out there. People are becoming more educated and more empowered to know that they can move old 401k plans over, they can take IRA dollars, and they can start to what they call self-direct these accounts. And I think it's important to understand what kind of, or at least identify, not understand, but identify what kind of dollars you're trying to invest, because that might determine what kind of investment you put it in. For example, if you're looking at buying a short-term note and you're using a self-directed IRA plan, understanding what fees you're going to be charged and how long your money is going to be deployed, that affects your return on your capital, right? Because you have costs to move the money from the self-directed custodian. You need to look at how long your money is going to be tied up for. A lot of times with self-directed IRA accounts, at least for me personally and my husband, we want to put these in investments that are going to sit there and we can forget it. We don't want to get our dollars back. Ultimately, that's the goal at the end, but we want our money out there working. So sometimes a fund structure for self-directed accounts could potentially be a little bit better fit than liquid funds. So again, you just need to determine what kind of dollars are these that you're looking to invest. How long can you tie your capital up for? Or how long do you want to tie your capital up for? There are syndications out there that tie your money up for 5 years. If you've got kids that are going to college and you know that you need to access this capital in a year or two, it probably doesn't make a lot of sense to be doing due diligence on an operator where it's a 5-year commitment. So again, understand how long you want to tie your capital up for. Also identify what you're trying to accomplish. Are you trying to create cash flow? Are you in a situation where you've retired? Maybe you've sold a business. I deal with a lot of dentists that sell practices, and now they're trying to create cash flow to replace their income because they are no longer practicing. That might look different for an investment versus somebody that's more growth minded, that's in a place in their life where maybe they have regular income, but they want to take what they've been saving up. Maybe it's an old 401k or something of that nature, and they want to grow that account as quick and as fast as they can. That would be more of a growth model where you might look for a fund where you could reinvest your earnings versus getting paid every month or every quarter. So understanding what you're trying to accomplish. This is one that may not always come into question, but geographical location. I mean, are you very specific to deals that you want to invest in based upon where they're located? I get people that say, I want to buy notes, but I only want to buy them in the state I live in, because I know that if a note borrower doesn't make their payments, I have to foreclose, and I want to be able to drive to the property. So if that is something that is important to you, identify that. Asset class, are you open to everything, or are you only looking for residential properties to invest in? Are you only looking for self-storage, commercial? You may or may not have a preference for that, but if you do, it's important to identify that. Then when you start doing your due diligence, you can ask, hey, central lending, I only invest in commercial funds. Great. Well, we don't lend on commercial, we lend on residential only. So, you can quickly, because if you don't have an idea of what you're looking for, you will have analysis paralysis. You will get all this information thrown at you, and it's going to be very difficult to make a decision. You want to be able to go through these quick. And then the last thing that I would empower all of you is, what is your criteria for saying no? It's okay to say no to an operator. If they don't check all your boxes, move on to the next one, but you need to know what that is. What are your big red flags? It may be, hey, I don't invest in funds that aren't audited by an outside auditing firm. What is that criteria? But knowing that ahead of time will make it much easier for you guys to begin and perform your due diligence, ultimately to make a decision if this is a good fit for you. I did have Tim come in and he asked, is commingling self-directed IRAs and liquid cash on the same deal? And I can't read the rest of it. Let me expand this, Tim. I think what he's asking is, can you commingle self-directed IRAs and liquid cash? You actually can do that. So for example, let's say you find a promissory note you want to buy, and it's $50,000, and you've got $25,000 in your self-directed IRA, and you've got another $25,000 in cash. As long as the vesting on the title is identified that way, for example, Tim's self-directed IRA owns 50% of the note, and Tim as an individual owns the other 50%, and those payments are split up accordingly, then you can do that. But again, those payments have to go 50% to Tim's IRA and 50% to him personally. So you could, what they would call, commingle those investment dollars. But that's a good question, Tim. So I think there's 3 core areas of focus when doing due diligence. I think your due diligence needs to be focused around the sponsor, the asset class, and then the investment monitoring. And investment monitoring is kind of, setting your expectations for what's going to happen after you make the investment, and how are you going to monitor that investment to know that it's performing. These are 6 questions, and you can ask more questions, you can ask less. I mean, this is really, again, just to kind of give you guys a little bit of a guideline as where to start. These are 6 questions that I think you should be asking. So 1, how did the sponsor get into real estate? What's their story? We all have a story. Everybody got started somewhere. Central lending is no different. Our CEO, Andrew, was an active real estate investor, and he started buying real estate. He saw the opportunity to start being a private lender and start originating loans as another stream of income. And that's where he really cut his teeth on real estate. And actually, he started being exposed to real estate when he was a young child because his parents were real estate investors. So really understanding, how they got started, where they came from, what their background is, I think is important. Ask them what their asset acquisition strategy is. Like, how do they find deals? How do they source new opportunities? Because I think this is a big one. And I actually just had a call today where I talked to somebody about this, and this gentleman was doing this on his own. He's out there being a private lender, but at some point you become limited to the amount of deals that you can find and do. So finding a sponsor or a private lender like us broadens your horizons, whether you're buying a note or you're going in a fund. A company like Central Lending has a marketing department. We have relationships with brokers and other lenders that are sending us deal. So what you want to understand is, how is that sponsor sourcing those deals? Where are they coming from? Because the biggest concern with a fund is, hey, we get a bunch of money raised in there, and are they going to be able to deploy it quickly enough, right? Because that's the whole name of the game. Get that money out there working. That's how we provide the returns that we do to our investors. So ask them, how do you source your investment opportunities? If they're buying real estate, how are they finding their deals? You know, everybody has different strategies, and it's okay to ask them what those are. Ask them what key markets do they operate in, and why do you operate in them? Um, you know, for us at Central Lending, we only buy real estate in Florida because it's in our backyard. However, on the private lending side of things, we lend all over the United States. We're not in every single state, but we have a pretty broad reach, you know. And then the next question I would ask them is, how do you how do you risk adjust for that when you're in different states and you're located in? Well, for us, we have a legal team that is nationwide that makes sure that our closing docs are done properly. We have an underwriting team. We have a national servicing company that services our paper. So understand what key markets they're in. Ask them what their investment philosophy is. How do you determine whether a deal is worth doing? You know, and that's a hard one. And I think that changes, you know, as the market changes. And that's a question you can kind of dovetail off of this is, you know, if this is a deal you did today, how does that look 12 months down the road? If they are a experienced and seasoned fund manager and operator, they've probably been through some headwinds in the past 5 years, you know. And how do they determine whether they're going to actually do a deal? You know, we have clearly defined underwriting guidelines, but we actually look at every file individually. And just because something meets our guidelines doesn't mean we actually move forward with it. The deal has to make sense. So understanding what their philosophy is, whether it's acquiring properties or lending money, just get your head wrapped around that. How do you generate value once you've made an investment? What do you do to ensure that the investor gets a return of capital and a return on capital? What are some of the ways that you mitigate inherent risk? So I think that's what this question really does cover is how do they mitigate the risk, you know? And there's a lot that goes into that. You know, I think there's risk before the deal is done. I think there's risk mitigation once the deal is done. Like for us, it's servicing. How do we collect on payments? Well, we have an internal team that's calling borrowers if they're not making their payments, you know, helping borrowers with solutions when they have a hiccup. And, you know, first and foremost, our first priority is capital preservation. You know, for example, we don't lend more than 70% of the value. You know, the risk in private lending is somebody may not make a payment and you may have to foreclose, but have you structured a deal properly enough that there's enough equity in the deal that you can get out whole? It's great that we can provide, you know, possibly 10% returns to our investors. And I'm just throwing that number out there. But how do we mitigate them losing any capital? And I think that's the most important thing. I think the ability to give them high yields is just icing on the cake. And then the last question is, who's the team? You know, what you don't want is a single point of failure. You don't want one person running the show and they have no support staff and they get hit by a bus tomorrow and everybody's asking who's going to keep the doors open, right? Who is the team? Who are the team members that are making things run? What is their experience? What have they done in the past? So really diving into the team is super important. I've got a couple more questions. I will address these just really quick because they seem like they apply to this. Raymond actually asked, what's your minimum investment? Our minimum investment, Raymond, is $50,000. Let's see. These other ones really apply to buying notes. So Tim, I'm going to wait till the end to address those questions for you, but I will get to those. I want to make sure that we can cover everything, and I don't want to keep everybody forever tonight. But Tim has some great questions about buying notes, so I will address those at the end. So going back to the sponsor, understanding who their key principles are and what their experience is. I just mentioned this. ask those questions, ask to talk to them. There's nothing wrong with that. You should be able to have access to everybody on that team. It doesn't mean you should be calling them every single day. You want them managing the fund and making you money, but you should be able to have access to them, and they should be transparent about that. I would assess their qualifications, what's their history, what's their industry reputation. One of the things that I offer all the time is references. Ask to talk to some of their investors, and not just the ones that love them. Hopefully they are open and transparent enough to let you talk to people that have been around the block and that are going to give you the good and the bad information that you're looking for. Another big one is, what's their track record? That is huge. A red flag for me when picking investments is somebody that just got into the industry. It doesn't mean they can't be successful, but I really want to invest with somebody that has been through the challenging times, that has been through maybe 2008 and COVID and survived. And what did their track record look like? And are they being transparent about that? So asking what their track record is and asking to see evidence of that is okay, and you guys should do that. Review their past performance, like I said, including successful and unsuccessful investments. Investment strategy and objectives. What is the sponsor's investment philosophy and strategy? We talked a little bit about that. Understanding what their approach to the markets are, what asset classes they're in, what's their risk management. I've said this for a long time, but I want to align myself and invest in things where somebody is an expert at that asset class. I'm not interested typically in investing our dollars with a fund operator that's trying to be everything to everybody, meaning they're doing commercial and they're doing self-storage and they're doing residential and they're doing commercial. I think it's really hard to really sharpen your knife and be the expert on all things. So asking them, what is your asset class and what's your philosophy on that? And are their investment objectives clearly defined and realistic? So, what I mean by that is, do they align with your investment goals and your risk tolerance? If, they are in an asset class that you're not comfortable with, well, there you go. There's, one answer to that. And that's probably a red flag that it's not the right fit for you. It doesn't mean they're a bad operator. It just might not be a right fit for your dollars. If they're more risk tolerant, if your guidelines to lend is no more than 50% of the value and they're lending 70, well, that doesn't fit your risk tolerance either, is what I mean by that. So understanding their financial capital structure and understand that this is a tricky question. I think it's something that they should be transparent with you about. And if you are investing in a fund, this kind of information should be readily available to you, especially if they're using a third party as their fund management. So for example, with central lending, we currently use Verivest and they do our monthly financials for us. They are a third party, so we don't do that internal. Obviously, we go over the financials internally, but they are the ones preparing them. So it's another set of eyes that is a third party that is making sure that there are checks and balances. We also use a third party auditing firm at the end of the year, and they come in and do a full audit of our funds. And that's another big thing for me is I will only invest with operators that are auditing their funds. I think it's just an extra set of checks and balances to make sure things are as they should be. So it's okay to ask these questions. Ask what their financial health is, ask how their capital is structured. And so what I mean by that is most funds have the ability to leverage their funds. They can borrow money against their assets in the fund. And this is a good thing. Some people get freaked out by this, but this is how funds become very profitable. It's not as common right now because it is expensive to borrow money. But when rates were much lower, if you could borrow capital at 2 or 3%, deploy it at 10, if you're paying 2% for the money, which we're not right now, right? Then you're still getting 8% on it. Plus you have the ability to make more profit for the fund. But asking how that capital is structured, excuse me, that information should also be within their PPM. Which is their private placement memorandum. You should be asking to see that. This is going to tell you what the fund has the ability to do and what they cannot do. And so it's okay to ask those questions. You can ask to review their financial statements. If they have audited financials, ask to see those. Ask to see if they have any outstanding debt leveraged against the fund. This would be lines of credit and things like that. And then also understanding their funding sources. What are their commitments? Are they using leverage? Again, it kind of refers back to the leveraging component in funds. And again, these are not uncommon structures in the fund management world, but I think what isn't as common is that investors ask these things. And then when funds start to have trouble and these things start to come to the surface, they're like, well, I didn't know that. I didn't read the PPM and I didn't ask them these things. And, as funds are winding down or if they're being taken over and wound down and they find out that there's leverage on them and that the leverage was supposed to be paid first. These are things you don't want to find out after the fact, is my point. So it's important to ask these questions. This covers risk management and compliance again. I think we talked a lot about risk management, but how do they monitor whether their portfolio is performing, right? What does that look like? For us, we meet with our servicing team. So we have an in-house servicing team. Just as a reminder, our fund is debt, meaning we lend money out. So for us, it's really important that our borrowers are making their payments. So, another example of that might be a self-storage unit. What they might monitor is rents coming in, vacancy rates, things like that. So understanding what they're monitoring is important, and how they mitigate the risk with those assets. For us, we meet twice a week with our servicing team, and they report to us and tell us, these are the loans that are paying, these are the loans that are behind, these are the loans that are potentially maturing, meaning they came to the end of the term of their loan and they haven't paid off. So again, we meet twice a week. And in my opinion, that is a great way to mitigate risk as far as fund performance of our portfolio. We also meet once a with our underwriting and processing team, and we go over every file that comes through processing and underwriting. So there are human touch eyes on that, and we talk about any files that are outside of the box or even inside of the box that maybe our processor or our underwriter may have concerns about. And hopefully, with that daily process, that is mitigating risk of closing on deals that aren't great. There's always things that are going to slide through that you don't catch. But I think meeting on a daily basis and talking about those assets is a great way to mitigate the risk with that. The next is the sponsor compliant with relevant regulations. This is a big one. So depending upon the filing that the fund is with the SEC, there are different sets of regulations. Our fund is a 506c fund, which means we can only allow accredited investors to invest in our fund, but it is registered with the SEC. There are a lot of other types of funds out there. There's what they call Regulation A+ funds. This allows unaccredited investors to go into it, and there is a lot of reporting and regulation around that. But you can go to the Securities and Exchange Commissions, you can search a fund, you should be able to find there if they have any past violations, legal issues, they're not compliant. So do your own homework or do your own push-ups and check them out to make sure they're in good standing. So you want to make sure that that sponsor is compliant with all of the regulation around that. All right, I've got a lot of questions about notes. I'm going to get to that, so you guys sit tight. I saw your questions, Raymond. I'm happy to address those. We're going to keep going here. So performance metrics and reporting. So this is important to ask. Investment. I can't tell you how many people call me and say, I made an investment with Joe Smith's fund, and he only reports once a year, and I get reports from you every quarter and sometimes every month, and I'm super disappointed in that. And I'll ask him, did you ask Joe? Does he report more than once a year? Well, I didn't ask him that. Well, it's hard to be disappointed. It'd be one thing if he told you he reports monthly and he's only reporting once a year. So Asking these questions may not be a deal killer for you, but at least now you can set your expectations accordingly. So understand what metrics are used to measure performance. Determine what their benchmarks are, key performance indicators, things like preferred rates of return or what they call hurdle rates. Do you guys as an investor get paid first and then you share in the profit? Like, what does that look like? And then how transparent is their reporting? I would even ask for a previous report. That way you know exactly what their reporting is like. If you're not okay with it and it's not enough information from you, you can make the decision to say no and move on. If it's sufficient and you can live with it, great. But at least you asked. It's better than making your investment and asking those questions after the fact, because there's not a lot you can do about it after the fact. So everybody reports differently. One of our funds reports on a monthly basis. The other fund reports on a quarterly basis. So ask those types of questions. Ask how you receive the reports. You know, I've had people say, well, I only like printed copies of the reports and they only send out emailed copies. Well, did you ask? So understanding that, we use the Verivest platform, so our investors can actually log in. They can see their accounts. A lot of them reinvest their dollars, so they're not seeing the dollars come back, but they can log in there on a monthly basis and watch them grow. So that is one way that you can do that. Some operators and fund managers send out quarterly and monthly reports in an email in a PDF format. And some also send them out as printed versions. There's no right or wrong way to do it. But at least if you're asking these things up front, you will know what to expect moving forward if you do decide to make the investment. This brings us to fees and compensation structure. All fund managers are for-profit companies. They are not for nonprofit. You need to understand how they're paid so that you can understand how the profits are dispersed. You know, what fees are associated with the investment? Is there a management fee? Is there a performance fee and other charges? So for example, we charge a 1% management fee. I tell people our management fee keeps the lights on. You want a staff there managing your fund. The 1% management fee that we charge goes to pay staff. And then we pay what's called a preferred rate of return, or sometimes people call it a hurdle rate. Ours is 9%. So the next 9% goes to you guys as the investor. Now, if we hit that 1% and the 9, which is 10%, then any profit thereon after for the year, because these are annualized returns, is split 75% to the investors and 25% to us as the fund manager. What you want to make sure, it's okay that fund managers get paid, but most of the time, the best situation is where investors are paid first, right? A management fee is paid and then a preferred rate of return. And that can be 6%, it could be 7%, it could be 9%. Every fund is different, but that motivates a fund manager and operator to make sure that that fund is profitable. They're not just getting paid this big fat fee up front and then, well, sorry, Mr. Investor, you just get what's left over. So understand that there's different ways that that is paid out depending upon whether it's a evergreen fund and it has a lot of assets flowing through it, or it's a syndication where it's a single asset in a entity like a apartment complex, and the upside may be down the road 5 years when they sell it. So ask how the fees are associated with the investment and how all the profits are paid out. Is the compensation structure aligned with the investor's interests? Again, that's what a preferred rate is. An investor gets paid first, and then there's upside to share after that hurdle rate is hit. So understanding that, especially before you make the investment. And I know that sounds just crazy that people wouldn't ask those questions, but it happens all the time. And it really should be outlined in their private placement memorandum. So ask to see what they call a PPM. That all should be very clearly defined in there. So in conclusion, and I didn't want this to be a long drawn out webinar. I want this to be interactive, and I've got some great questions, but really it just kind of boils down to addressing questions that give you the best understanding of the investment sponsor and the investment, because once you've made the investment, there's tie-up periods. There's not a lot you can do after you've made it most of the time with these types of funds. But identifying, these types of things before you make the investment, I think will make you a more sophisticated investor. I think you'll be happier with your investment. And ultimately, identifying all these different things that we talked about, and determining whether they're a good fit to accomplish what you're trying to do, your goals and your strategies, ultimately will help you create more wealth for yourself. So a thorough due diligence process mitigates your risk, and it ensures that it's in alignment with your investment strategy. Um, Again, I'm going to put my contact info up here. So this QR code on here, if you want to schedule a 15-minute consultation with me, I'm more than happy to jump on a call. It's really hard to cover everything, in a 45-minute to hour webinar. And I know that you probably have a ton of questions. So I encourage you, if you're interested, you can schedule a call with me. We're also going to send out that checklist to you as well. So that will be coming here in the next couple days. And I am going to address some questions here for you guys because I think we have some good ones on here. Okay. Let's see here. Tim said, if buying notes in 2024, will this generate 5 separate 1099 forms from central lending, or a single form? So what Tim is referring to is, if you buy notes from us, the way that your earnings are reported is on a 1099. We service through FCI servicing, so they collect the payments from the borrowers and they disperse their payment, or they disperse the payment to the lender. They're going to provide you one 1099 form, regardless of how many notes that you buy. The caveat to that, if you invest in different ways, meaning maybe you fund a note with your self-directed IRA, and maybe you fund a note under your name, and then you have a family trust. For each of those entities that are being serviced, you're going to get a 1099 form. But if you hypothetically bought 5 notes all under your family trust, it's going to be one 1099 form to you at the end of the year, Tim. Hopefully that addressed that. Let's see. So Tim also asked about, in case of a default or foreclosure on a note, what's the best way to manage that? It really depends, Tim. If you are buying notes from someone like Central Lending, we have relationships with the attorneys, and we're happy to help coordinate that for you if you have a foreclosure that you need to begin. We can help you with that. I know that some of these bigger servicing companies will also provide foreclosure management services. But honestly, I think going to your network of people, I heard a long time ago that your net worth is your network. Honestly, I think asking around, if you're in the industry, you could refer even to us, and we could probably get you a referral for an attorney. We sell first lien position notes. So Raymond asked this. He said, what kind of notes are you selling, and what's the yield? So all of our notes are in a first lien position. They are all performing. So we don't sell discounted notes. We sell everything at par. I'd say average yields are probably 10 to 11%. Average term is going to be about 12 months. And Raymond actually did ask if we purchase non-performing notes. We do not purchase non-performing notes, Raymond, but go to PaperStack. PaperStack is an online platform, and you can actually sell your notes on there, and they're a great resource. Let's see. Here is another. This is a good one. Mr. Sanchez says, we actually ran due diligence on central lending. It's not hard to do. We couldn't find any red flags, and they don't know we did it. We know now, but that's okay. I encourage you guys to do that. I mean, I can't tell you how many people I talk to, and they invest, and then they find out that the person they just invested with is running a Ponzi scheme, and it's your hard-earned money and your investment dollars. You owe it to yourself to do things like that. And there are resources out there. Look for third-party management. Is someone doing their financials, or are they trying to do everything internally? I don't think that people set out to create Ponzi schemes most of the time. I think that bad operators get into trouble, and it just kind of snowballs, you know. But again, it's your responsibility as a responsible investor to do your due diligence. There is nothing wrong with that. You should do a check on the operator. Thank you, Tim. I had a couple other questions. So somebody asked me about our fund, if the earnings are paid out quarterly or monthly. There are different options that you can actually invest with us. You can have your earnings paid out monthly, but you can also reinvest them on a monthly basis. And then there is also another option that is a quarterly earnings payout. And I'm happy to discuss that in more detail if anybody is interested in that. The fund also has a tie-up period of 12 months, but as low as 4 months. So there are different options. There is what we call a fixed rate option, where you're depending upon how long you want to tie your capital up and how much you tie your capital, or how much the dollars are that you invest. That determines your rate of return. It's anywhere from 8 to 12%, and that is a fixed rate. That pays out on a monthly basis. There's also the option to come in as an equity member. And the upside to that is you get a share in the profitability of the fund. Average yields on that, and our target right now is 11%. That has a short 12-month time period, and that pays out on a quarterly basis. Somebody else just sent a question through and asked if we work with self-directed IRA dollars. Absolutely. I'm a huge fan of self-directed accounts. I have them. My husband has them. We absolutely are friendly to IRA accounts. And the other thing to keep in mind is, and I'm not going to go down this rabbit hole, but a lot of times when you invest your IRA dollars in a fund or a syndication, if that fund or syndication leverages their fund, meaning they go borrow money, it will create what's called UBIT tax, which is unordinary business income tax. And if you don't know that, you're going to get hit with a UBIT tax bill at the end of the year. Our fund, if you come in as a fixed rate option, you don't have any concerns with that because you get a 1099. You do not get a K1. So that's another question. Ask a sponsor, hey, if I'm investing self-directed IRA accounts, is there the potential for UBIT consequences? So another one to be asking. Tim asked when we started selling notes. So CL Central Lending has always sold notes. That has really been the way that we've deployed capital. We recently started opening up to selling them to one-off investors as well. We sell a lot of our notes to institutional capital, which should be a highlight for you guys because that means we underwrite a tight file because we do sell it to institutional capital. But good questions. I'm going to wait one quick second. Anybody else have any last minute questions? Again, just to kind of remind you of a few things, my contact information is on the screen for you. You are more than welcome to email me, call me. If you want to have a short 15-minute consultation, I threw that QR code up there that will take you to a link to just make an appointment with me. You can fill a form out and we'll get an appointment scheduled. But I want to thank everybody for attending. I know that evenings are probably hard with family, so I appreciate you guys taking time. We will get that checklist out to you. And if you want to talk more about the fund or even the notes that we sell, I send an email out 3 times a week of available notes. I'm happy to get you guys on that list. So again, go to the QR code. We'll get your contact info and we'll make sure and get you on that list. But have a good night. We will have a webinar in June. I don't have the date set yet, but because you guys attended, you guys will be invited to that one as well. And if you think of any topics you'd like me to cover, I'm open for suggestions on that as well. But thanks for your time, and hopefully I'll see you next time.